All right, welcome back everybody to the Additive Snack Podcast. As you can see, we're recording live at RAPID. And today we have the amazing Arno Held with us for the second time on the Additive Snack Podcast. If you don't remember, Arno is the co-founder and managing partner of AM Ventures. And therefore, we have some really awesome topics to discuss about today. We'll talk about what does the startup landscape look like today? What are some trends? We'll touch a bit on tariffs. It is April 10th. Yesterday, Trump announced a 90-day pause, except for tariffs on China. Who knows? Maybe it's all different by the time this episode launches, but we'll still talk about it for a little bit. So, without any further ado, Arno, welcome back to the Snack.
Thanks, Fabian, for having me. It's a great pleasure being back. Absolutely.
So, Arno, the financial world has been in a bit of a turmoil for, a couple of years, actually. How's it going? How's it going at AM Ventures? What's there?
It's going well, considering the times we're in. You're absolutely right. There's a pretty big chaos, big changes in our industry, and that not only since yesterday or January, but that's been going on for about a year and a half, I'd say.
Yeah.
Right now. So I'd say the financial pressure is increasing. Lots of promises of the past years have not been fulfilled in the last 6 quarters or so. So the expectation from investors for this industry to produce some returns and to deliver on the growth promises that the companies have made in the past years is extremely high.
Okay.
It's still ongoing. Everyone's was hoping for year 2025 to show some relief and, let's say, first signs of hope. Every now and then you start to see these glimmers of hope. There are a couple of good things happening, but overall, there is quite an intense pressure and interesting kind of vibes that you can feel in this industry right now.
Yeah, for sure. I mean, there's various voices where we think we've maybe hit bottom as an industry earlier this year, maybe late last year. Is that also a sentiment that you'd share, or are you not even sure if that's still the case, at least within your guys' portfolio and what you see?
I'd say I just finished the first season of board meetings, Q4 reportings from our portfolio companies. And there are some good messages here and there again, where companies report on larger corporations placing contracts again and engaging in more innovative projects. So that's certainly good messages there.
Mm-hmm.
Are we through I think we're at the bottom. Are we through the bottom? Not sure. The question is how long is that
flat?
Bottom? How flat is it gonna be?
Yeah.
I guess it can only get better. But yeah, it feels like that we are through the worst, and now. But the question still remains: is are those companies that are extremely constrained on cash and on runway, obviously, are all of them going to make it into the future? That still looks very bright, but how far away is that from now? And most likely, not all of them are going to make it there.
Sure. I mean, that's the nature of startups as well.
The nature of startups. Correct.
I would guess. When you mentioned the financial turbulences have been going back to 1.5 years, I think there's obviously a lot of COVID money that was spent that then dried up. So I think there's various aspects to that part. There's, of course, also now a lot of political changes happening on the global stage, not just tariffs, but also increased defense spending in the European Union, and so on. So what's your take on the current political environment, and taking that back to additive? What's the potential impact of tariffs on additive? And also, do you see the defense spending having somewhat of an impact?
Oh, very much so. So first of all, defense was probably the industry in the last year or so that kept our industry afloat. If it wasn't for defense, this industry would look a lot different. And then, yes, you're right. Tariffs don't make our life necessarily easier, but because this is a global industry, we profit a lot. We benefit a lot from intercontinental cooperation, especially between Europe and the US. And imposing tariffs is certainly not going to accelerate this exchange. So that is certainly one of the big challenges for further growth in the future. But I'm sure with the most recent developments since yesterday, there are always some ways around it, and in the end, it will be resolved. But coming back to these, let's say, geopolitical tectonic shifts and the increase of global defense spending, I think, especially this current situation with the tariffs and with the US administration, it triggered a lot of developments in Europe that were not necessarily visible half a year ago. And I can see that now, especially in the last month or up to 6 weeks, there's an interesting vibe where suddenly Europe seems to be getting their things sorted out, and the cooperation between the European countries is increasing. Defense spending are picking up, and that's certainly due to this international pressure that's been built up. And in the end, I'm convinced that many of these companies are going to benefit from that. Also on the short term, it's actually happening as we speak right now. We all see the applications out there that are fueled from this development. So yeah, I think in the end the situation, as chaotic as it is right now and as unpredictable it is, you said it yourself in the opening statement, that we don't know what's going to happen tomorrow or next week, whenever this episode is going to be released. In the end, it's a development that helps our industry to get sorted and to get back on the road where we can finally focus on business again.
Yeah, for sure. And there's, as you said, right, there may be a path towards a strong collaboration between the US and Europe. I think the European Union offered 0 tariffs. There are some talks going on there. There's now defense spending in the European Union, which has not happened in that scale in decades and decades, really since World War II. So the additive manufacturing industry may actually benefit from this, right? We may still be focusing on reshoring, but in a smart and sensible way.
Very much so, yes.
Yeah. Now, before we dive a bit deeper into startups, because that's of course your world, explain to us AM Ventures for those who are not familiar with who you guys are.
Sure. Very simply spoken, we are a venture capital fund. 100 million euros of volume put together by 35 European families, more or less. 1 or 2 corporations are part of it as well. Our specialization is additive manufacturing. That's where all of my guys in the team, Johann Oberhofer, my partner, and myself, were born and bred. So we decided we want to invest the money that we are trusted with into the things we can understand, which is the additive manufacturing industry. So we look at startups across the portfolio, ranging from hardware, software, materials, applications, in pretty early stages, seed stage, Series A, provide them with funds, with access to our network, to the experts that we know, and we want to make them successful.
Good mission, fun mission, sometimes probably challenging mission as well. So what's the latest news in the startup world regarding AM Ventures, but also just in general the additive startup ecosystem? What's on the headlines?
On the headlines, cool thing is I think we just surpassed 3,000 startups scouted.
Wow.
AM Ventures is celebrating its 10th birthday this year.
Oh,
we founded the company in March 2015 and have been tracking the startups of this industry ever since. And I think no one else has the same overview as we have. We're trying to stay on top of the game, following all the startups that we ever had a look at, and also making sure that we understand where the whole industry is moving from a technological perspective and from applications. So what I can see when I look at the technology radar, how things have changed is that in the beginning, everything was dominated by hardware, by new kind of ways to 3D print things. And over time, we moved through software to now it's more an application focus. Finally, everyone's looking at what you can actually do with the technology that people have invented and have brought to the market. And now things are starting to change quite a bit to how can new technologies, especially AI, enhance that, and how can we get better at bringing even more applications to the market, and generate a broader acceptance of the technology. And so I think overall, or generally speaking, that's probably the most important and the biggest trend that we're seeing at the moment.
Yeah, super interesting. I remember last time we spoke, you talked about the rise of application-focused startups. I mean, additive drives being one of them, for example. How are those startups doing? The application-focused ones.
Actually, it's good to see that they are the best performing ones.
Okay.
Awesome. Right now. They are the quickest to scale. They are the quickest to break even, so becoming profitable and making money. So that makes me very proud to see that we identified a trend and we identified great founder teams very early in this development of our industry, and particularly startups like Additive Drives that is doing electric motors, Conflux technology with their heat exchangers, but also Vector Flow from Munich, printing pressure management or airflow measurement devices, are doing a really, really great job at showing where additive manufacturing technology can provide value to a customer, and also making sure that we capture some of that value with a great and innovative business model. So that's really, really, really good to see, and a big encouragement in times like these where there's a lot of uncertainty and financial pressure on the companies. There are some that flourish and perform on a very, very impressive and encouraging level.
It's awesome to hear. It's also a testament to additive, right? That you can start a company around that technology with usually an innovative application and become profitable. I mean, that is a testament to the technology and to the scalability of it as well.
Absolutely. And I mean, 4 or 5 startups are not enough. We need so many more, but this is where it starts. And we need these examples to also inspire others and to show that you can be extremely successful with this technology. So it's good to see that this is finally happening since a couple of years, and we're absolutely on the right track. Just like in the startup world, it always takes longer and it takes more money than initially anticipated. That's also very, very classic. But we have these stories. They are there. It's not a hope in the future. It's not an empty promise. It's something that we deliver right now.
Yeah, it's like every project I do around the house. It takes 3 times as long and costs more money every time. Every time. Yeah. So we briefly touched on AI. And if tariffs is a big topic in today's news, AI is still a big topic in the news. And it, of course, is becoming increasingly an interesting technology for additive manufacturing for various aspects. So how do you see AI changing the game for startups, for the technology, even for the industry? Let's start with your startups then.
No, I think I'd like to start generally.
Okay.
I think it could be the missing link to success and to the great scale that we've all been waiting for such a long time. Simply because additive manufacturing technology is such a data-heavy technology. You somehow need to condense all the data that we are generating into valuable learnings, and with humans condensing this information in form of professional experience, this takes decades. And we cannot scale these people fast enough because this is decades of applications engineering and also work in field service, working on the machines with the customers, that you need to evolve this technology. And AI can dramatically accelerate all that. There are a couple of great examples out there where companies, AI-based companies, are going to dramatically accelerate the development. And I'm not talking about design necessarily. That's probably the first example that comes to mind. AI-based automated design of applications. I'm not exactly sure that this is where it starts. In my opinion, it starts inside the machines, in the process where you are building these parts and bringing the designs to life into the real world. And there are two great companies that I'm particularly interested and excited about. It's Euler 3D and 1000 Kelvin from Berlin. And they are great examples of how AI can improve the quality and the reliability of this technology. This is exactly what Euler 3D is doing. They look at the powder bed and the build, and they can tell you things about the condition of your machine and potential defects or sources of defects that an applications engineer with 30 years of experience cannot do. But AI can do it in a way like hundreds of thousands of people can't. And this will certainly lead to an increase in trust in our technology, and also an increase of the performance and productivity. And the same goes for 1000 Kelvin from Berlin. That startup is a team of very inspiring entrepreneurs that can accelerate the development of materials and parameters for additive manufacturing. Again, I mean, you know how big the effort is within EOS to qualify a new material for one type of machine. We're not even talking about several materials for several types of systems out there. That's man years of effort. And 1000 Kelvin with a physics-based AI model, they can do it in moments. And I think for our industry to diversify into more verticals, into more applications, into more other industries, that's exactly what we need. We need to accelerate the development. We need to improve on quality and productivity and on the price of these machines. And that's exactly what AI is going to help us with.
Yeah, for sure. It reduces the barrier on multiple levels into the entry of additive or into the scaling of additive, that you can say, right? So with companies like 1000 Kelvin, reducing the risk of failed builds, first-time writes, even prior to printing, but also, like you said, the marketization of knowledge that, I don't need a 15-year experienced additive manufacturing engineer anymore that can look at a part. I know exactly how it's going to distort. That takes so much time. We don't have that much time. And it's really hard to hire experienced application engineers, and software tools and AI tools like that can certainly help. I could also see a very interesting impact on the startup world in the software space, just purely by enhancing your startup's team's capabilities with co-pilots, right? Accelerating the development curves, increasing efficiency of development teams, especially in cash-strapped times.
Yep.
Do you see your teams to adopt AI also during their own internal development processes?
Absolutely, and not only in software companies, hardware, new materials development, applications development. I mean, the big advantage for startups, ignore AI. The big advantage for startups is these are companies that are designed on a green field, right? It's not like industry incumbents that need to shift the big tanker into a new direction. Startups are the speedboats. They are designed on a green field around one specific application, for example. They can easily implement all kinds of new tools, and AI is one of the tools. But you don't have to change processes. In a startup, you can design processes around new tools. That's the biggest advantage of small and young companies. And the same goes for the use of AI in all different kinds of processes, in whether it's R&D, whether it's HR management, vendor selection, qualification of new technologies. Startups can build their processes around AI and have a dramatic head start against big incumbents who need to restructure entire departments to get ready for the use of new technologies.
That's a good point. Yeah, you can have super small teams now being able to compete better with large organizations due to the efficiency gains that they can have internally, and not needing to hire those types of positions anymore. You now talked earlier about the potential long plateau in the industry, and we see really good signs, I think, of an uptick. What type of challenges do we have to overcome, and especially in the startup world that Additive has to overcome, in order to start to ride the wave upwards?
A couple of challenges. I mean, I'm not talking about new startups that are being founded and funded today. Let's talk about the companies that are active in business here as we speak. One of the biggest challenges, I see two big challenges, but they are interconnected. So a very big challenge right now is we come from a hype phase. Startup valuations were extremely high up until the year 2021, 2022 maybe. So it was relatively easy to raise a couple of million to build your company and start it. And then the drop came. Expectations were deflated or disappointed. The valuations dropped. And with many companies, many founders that had funded their company on an extremely high valuation, despite the fact that they overperformed on their plan in terms of growth, when they reached a point where they had to refinance their company in a Series A or Series B, they might have overachieved on their plan, but the valuations, the revenue multiples had dropped. So they would get a much lower valuation to refinance their company than in the previous round of financing. So there was a point where the founders, in order to avoid dilution in their own company, they avoided pricing discussions about their companies by accepting debt round, convertible loans to fund their companies. That started around the year 2022, 2023. And typically when you raise a new round of funding, you buy about something between 24 and 30 months of runway. So we're now entering a phase of the market where the valuations of companies still have not necessarily improved, but the startups have been loaded up on debt. There's a big risk of the founders becoming extremely diluted and so losing a lot of shareholding in their own companies. And these, let's say, discussions and the fear of dilution and losing part of the company to investors comes to the second challenge, that many of the founder teams are extremely exhausted. We're at a point in the market where revenue projections have not necessarily been met by most of the companies. The discussions in the cap table, in the shareholder base, have sometimes not been friendliest because it's super tough times, and that takes its toll on just the morale within teams. Some companies have gone through cost-cutting measures. In the worst case, 3 rounds of cost-cutting measures over 2 years. So there's also teams that are looking if the grass is greener on some other sides of the fence, which it typically isn't. But of course, that is just a normal development. So I think these are the biggest challenges for startups right now. Most of them need to refinance themselves. They need a couple of million but the debt situation in these companies is not ideal. So the discussions, down rounds and dilution is ongoing in most of the companies that I see around them. And that's, these are different vibes compared to 3-4 years ago, for sure.
Yeah, well, that's certainly not easy also on you guys and your teams to be a part of those conversations. What's the way out? Is there a way out?
It's a very individual answer. It really depends on the case. You really have to look into shareholder structures and into business models and into the technology itself, in which sub-segment of the market a company is operating in. I mean, a very ambitious or aggressive way out is becoming the consolidator instead of the consolidated one.
Oh, okay.
Because of, let's say, once all your competitors in your sub-segment of the industry are suffering, it's certainly a good time to start acquiring and consolidating parts of this industry. And that's what we see happening at many corners here. Whether it's, let's say, post-processing technologies or materials companies, some consolidation attempts in hardware are happening as we speak, not so successfully from what I'm seeing at the moment. But the way out is, it's very case specific, and needs a lot of analysis, and it needs a strongly aligned shareholder base in a company. And I think we're doing a fairly good job on this. My team is incredibly busy working day in and day out in exactly these discussions with every single portfolio company that we have. But I must say it's much more work than in previous years. But I think we're on a good track. We'll need a couple of more quarters. Not exactly sure when we will reach the end of this plateau. But it feels like we're slowly getting there.
Okay, that's really good to hear. Let's talk a bit about the brighter side of your work. So I'm really curious to understand. So the majority of your investments happen in Europe, and that's also, let's be honest, the majority of additive innovation has happened for quite some time, right? How do you see the startup world in the US picking up? Do you foresee more investments in North America? How does that regional landscape look like, and where do you see future growth there?
That's an interesting question. I mean, from the beginning on, because we are a technology-focused fund, we try to look at the whole world because we cannot afford a regional limitation, right?
Sure.
So we've tried to keep track of what's happening in Asia, in North America, and in Europe, which are the most relevant regions for AM. Of course, naturally, because we were born and started in Europe or in Germany, in the DACH region, this is where we had the strongest view of the market. But today, AM Ventures is invested between Austria and Australia. So we've got 6 countries currently where we have shareholdings: Germany, Austria, Switzerland, the UK, the United States, and Australia.
Okay.
Therefore, yes, we are also, of course, we've been observing the United States ever since we started this. And what I'm realizing about the startup culture here in the US, it's much more volatile in the US. The highs are higher, the lows are lower than in Europe. And this means whenever you have extremely strong and encouraging times, there are so many more startups founded here and funded here in the United States. But once the wind turns, it's also much more hesitant than compared to Europe, for example. And I'd say for the biggest part of the last year, the startup scene was extremely quiet over here in the United States, but this is beginning to change.
Okay.
Again. What I'm seeing is that there are new companies started, and also some just most recently started companies are funded at a level which I haven't seen in the last 3 or 4 quarters. So this is starting to pick up. We see businesses that are manufacturing parts, real parts, but we also see applications-based companies, really interesting ones, being founded. So I think we are getting to a point where the general mood could swing towards better times again.
Okay, that's very interesting and really good to hear. So what's the industry outlook then? Looking into the next 3 to 5 years, where do you see growth? Is it only going to be AI startups? Are your application startups going to continue to outperform? What's your crystal ball tell you?
It's a good question. AI startups do have a very bright future, but in the end, they are also a tool.
Sure.
Right? We can't forget someone has to manufacture these parts and someone has to develop applications. Yeah. And in the end, what you can sell to a customer is a very valuable part.
It's the end goal, yeah.
And that's the end goal. So yes, we will see more AI-based companies for sure. But still, to me, the most exciting stuff is actually what you can do using AI, using machines, using spectacular materials, and producing parts. Not only defense parts like the silencers that we're seeing and missiles and all kind of weaponry, but also great products like clean technology that helps to somehow clean up this planet, generating new ways to generate energy, new ways of transportation, of electromobility, whether it's road-based, air-based, or rail-based electromobility. And all this is fueled by AM technologies. So is it happening as quickly as we were hoping to? No, certainly not. And I think we still have a couple of tough quarters ahead of us. I can't say if it's 2, 3, 4, 5, but I'm pretty sure within the next 2, 3 years, we might see another hype. We might be beyond the hype already in 5 years. I don't know how quickly it's happening, but with everything that's happening on this planet, everyone is becoming more digital, and digitizing this planet means digitizing manufacturing.
Sure.
And if you want to digitize manufacturing, you automatically end up with additive manufacturing technologies. And for this reason, my conviction is still unbroken that this technology is changing the world.
Well, this is a perfect ending to this episode. There's nothing to add. It sounds like there is light at the end of the tunnel, especially for the startup world in additive.
Yes.
A bit more hard work to do.
There is,
but
for sure.
Very, very promising. Arno, thanks for being with us today. As always, it was a pleasure to have you on the show.
Thanks for having me, Fabian. It was great fun.
And for you out there, if you like this episode, please share it with your colleagues, your friends, or anyone who's interested in additive. If you're thinking about starting a company, talk to this guy. He knows best. And leave us a review, share it, and I will see you next time.